Welcome back to week 4 of scaling my account from $25,000 to $32,000 in 52 weeks or 1 year. Last week we made over $720 over the past 4 weeks, and today I'm going to show you exactly what I'm doing for this upcoming week. The expiration for this week is May 29th, which is this Friday. This week will be a little bit shorter of a trading week with Memorial Day falling on this past Monday. Today is Tuesday of this week, so let me go ahead and get started with some trades for this week. So we still own those 100 shares of Chewy right here, as you can see. Our entry cost is $24 a share. We still own those 300 shares of SoFi as well. We will be selling covered calls on those right now. So let me go ahead and go over to the chart view here. I'll pull up Chewy first. Looks like we already have it pulled up. As you can see here, the price of Chewy is sitting right at $21.25, lower to that bottom of the Bollinger Band. These blue lines make up the Bollinger Band, which is ideally the place where you want to sell a cash secured put at the bottom and sell a covered call at the top. So here we already own 100 shares, so we're going to look at the covered call side of the options chain here. We're going to scroll down to the $24 strike price, and as you can see here, the premium isn't very large. It's only about $2 at the moment. We're going to go ahead and just get this filled. We don't want to ideally sell covered calls below our entry price of 24. We want to stay at least at that price. So we're going to choose one contract here since we only own 100 shares of the stock. We're going to go ahead and send that off. It is only a $2 premium we will collect, but we're just agreeing to sell the 100 shares we own at the price we bought the shares at, which is fine. So I'll go ahead and send this off, and we'll get filled there on the first position. Next one is going to be on SoFi. We are in SoFi at the $16 price. We do own 300 shares of SoFi. SoFi is sitting right at $15.98 right now, so basically right at our entry cost, about 2 cents below it at the moment. So we're going to agree to actually sell SoFi at $16 a share to get the highest amount of premium for the week. So if we scroll down here, we can see $16. We're going to go over here to the call side, and we're going to choose the last price, which was 35 cents per share. 35 cents on a $16 position is about a 2% return on the week. So I'm going to choose 3 contracts here since we do own 300 shares. Sell 3 covered call options at $16 strike price for $35 premium each. So we're going to collect about $105 for agreeing to sell 300 shares of SoFi at this $16 price. So I'm going to go ahead and get that filled. We'll collect $105 for doing that. Perfect. So those are the 2 covered call options we will be selling this week. Those are the only shares we own at the moment. We are in about $7,200 of stock with those 2 positions combined. So we have about $17,800 left in cash to work with. So I'm actually going to sell some additional SoFi put options. We already do have SoFi pulled up here. As you can see here, this blue line is showing the Bollinger Band. So this very bottom portion here is sitting at $14.72. That's ideally where we want to sell cash secured puts to have the lowest risk of being assigned. Ideally, we want the position to expire worthless so we can collect the premium and basically replicate this strategy over and over and over again without owning shares. So that's the goal for these cash secured puts with the cash we do have available. So I'm actually going to go over to the $15 price. We're going to go to the other side of the options chain. It looks like there's a $6 premium to be collected. We're going to make sure that sell is selected. I'm going to choose three additional contracts to sell a cash secured put on. At the $15 price, we'll collect $6 of premium per contract. So this is just under a 0.5% return for the week, which does equate to around a 25% yearly return if you're able to get this type of return every single year. That just applies to this position. I will do a total return calculation at the very end of this video. So I'm going to make sure 3 sell cash secured puts are selected at the $15 price. we're going to collect a total of $18 for doing that. I'll send those off. Perfect. So we are agreeing to buy SoFi at an even lower price than we own them right now at the $15 price. Next, we're going to take a look again at Chewy. We're going to try to attempt to lower our entry price again, once again here with Chewy. So I'm actually going to choose the $20.50 strike price here on Chewy. The premium looks like it's sitting right at $17. So we're going to agree to buy Chewy at $20.50 per share if it does reach that price by the end of the week. We're going to do one additional contract here to basically agree to do that. We're going to collect $17 for agreeing to buy those shares. I'm going to go ahead and send this off. Same logic applies with the Bollinger Band. We want to go as low as possible on the strike price of the cash secured put while still being able to collect a large premium. And that's what this $17 is it's the premium. $17 divided by $2,050, which is the amount of capital you need to put up for this trade, is basically your weekly return. So that's about a 0.8, 0.9% return on the week, which is a great return. I will take that all day long. So I'm going to go ahead and confirm this. We'll collect $17 for agreeing to do that. Perfect. So we have sold 2 cash secured puts so far for this week. Next one is going to be on IREN. I've been selling cash secured puts for a couple weeks now of this challenge on IREN. We still have not been assigned. We've been able to collect the premium without being assigned, which is ideal. That's exactly what we want to replicate week to week. This week, as you can see here, IREN is on the higher end of the Bollinger Band. This yellow line sitting right at $59 is the current price. $64 is the top of the Bollinger Band. I'm going to agree to buy the shares right here at $50, which is very, very close to this white line, which is the 30-day moving average. So stocks tend to move back to their 30-day moving average over a longer period of time. It's just an average, so it doesn't really give you a perfect sense of exactly where the stock's going to move, but gives you a better sense of where the stock may be trading in the future. So here, I'm going to scroll down to the $50 strike price here for IREN. I'm going to scroll over to the last amount of premium, which is $21. This is about a 0.5% return once again for this IREN cash secured put. We're going to choose one contract here. This is going to be a $5,000 amount of collateral being put up for this trade. If IREN drops from where it's trading now, from $59.78 all the way down to $50 in the next 3 days, I will be buying 100 shares of this stock. But guess what? I'm getting paid $21 for agreeing to do that up front. I'm going to go ahead and fill this here. We're going to collect $21 for agreeing to buy 100 shares of IREN at $50 a share. I'm going to send that off. Perfect. So that's the third cash secured put for this week. Next one is going to be on Oscar Health. Been trading this one a lot as well. As you can see here, it has had a little bit of a recovery here over the past 2 weeks or so. It reached a peak of around 25, dropped all the way down to 22. So I'm going to agree to buy 200 shares of Oscar Health at the $20 strike price. I'm going to choose the $20 strike price, scroll over here to the last amount of premium, select sell, and we're going to choose 2 contracts here for Oscar Health. This is going to be a total of $4,000 of collateral being put up. We're going to collect $16 for doing that. It's sitting right at the 30-day moving average, which is the white line near $19.63. I'm comfortable with that being my entry price for this particular stock. We're going to send that off. Perfect. And the last cash secured put for this week will be on HIMS with the last amount of collateral we do have available in cash. Cash secured put, that's exactly why you do need some cash available in case you are assigned on the position. Lastly, we're going to take a look at HIMS. We've been doing HIMS pretty much every week of this challenge as well. We have not been assigned at all. Our strike price selection has been perfect. So we're going to go ahead and take a look at the $22 strike price. This is an ideal entry price. As you can see here, it's very close to the bottom of the Bollinger Band, which is sitting at $21.58 currently. We're going to scroll down to the $22 strike price as mentioned. We're going to scroll over to the last amount of premium. We're going to choose sell. We're going to choose one contract of HIMS. HIMS is a very, very volatile stock, so I don't want to do a huge amount of capital considering we only have $25,000 of capital to work with for this challenge. I'm going to go ahead and get this filled here at the $22 strike price. We're going to collect $13 of premium upfront for agreeing to buy 100 shares of HIMS at the $22 price. If it does reach that by this upcoming Friday, which is May 29th. I'm going to go ahead and confirm and send that off. We will collect that amount of premium upfront for agreeing to do that. And so that is all of the positions for this week. Every single one of these positions will likely expire worthless. We may get assigned on SoFi since we sold a cover call very close to where it's currently trading. That is completely fine. If we do get assigned on that SoFi position, it will get converted back into cash, which we can then sell additional cash secured puts with. So that's not a huge risk I'm worried about. We have still collected a huge amount of premium. As you can see here, this is the real amount of premium we've collected this week so far. Tune in for next week. Will be week 5 of scaling this account from $25,000 to $32,000 in 52 weeks. If you want to learn more about how you can get started doing this on your own, comment the word call below and I'll send you a completely free booking link and we can actually just walk through your current situation. If this may be a right fit for you as far as learning this strategy on your own, comment the word call and we can take a look at your current situation and see if there's any way I can help you. Awesome. Thanks for watching and I'll see you guys in week 5.